Welcome to the 4 Wise Monkeys, the best shares and investment advice on the web. Our 4 monkeys providing the wisdom this week are none other than David Stevenson from the Financial Times, Stephen Barber from Self-Trade, ProShare investor Paul Dolman-Darrell, and the naked trader Robbie Burns. And your host today is Ryan Dean. Beer and banks are some of the areas the monkeys are going to be looking at today, but can you actually make any money there? Before all that, we go to Robbie Burns to find out what he's been buying and selling this week.
What I like at the moment is BTG, Life Sciences Group. It's got a very interesting product. So if you have got varicose veins, instead of having to go to hospital, you can use their foam-based product. It looks like it could get approval very soon. It's also got a very strong cash position, this company. It's got lots of interesting products. And if one of them takes off, I think the share price on BTG is going to really take off too. Okay, well, at the moment, with share prices coming down, it's obviously worth hedging positions in the market. The way I've done it is to short the FTSE 250 rather than the FTSE 100. The FTSE 250 is full of medium-sized companies that are doing very badly. And so I've got a covered warrant put option in the FTSE 250. And especially in a pension plan, for me, that's a great way to hedge my longs in the market. So I'm basically short the FTSE 250.
Now it's time to find out what's getting the monkeys in the studio excited. Right guys, I'm absolutely sick of all the negativity in the markets at the moment. I want you both to be a bit positive today. So David, you're up first. What are you looking to buy, David? Buy is the key word here.
All right. I'm gonna give us a buy, and it's Greene King. Now, I'm a bit of a wine drinker, so I've just got to consult my list of beers it makes here. al.l, IPA, Old Speckled Hen and Ruddles. And I think I like Ruddles.
They also own quite a lot of property, don't they, David?
The medium-term story is they've got a lot of assets, a lot of property assets. Now, arguably those property assets might not be worth what they are at the moment in about a year's time. But basically, you're buying a very strong performing business that in the last 5 years consistently increased earnings, year on year for the last 5 years. It's had approval at some point later on this year or possibly next year to turn into what we call a real estate investment trust or REIT. And what that basically means is it's a tax structure which allows them to pay out even more in dividends. They're already shaying out about 6.7% on the yield in dividends, a lot of cash flow, and it'll probably go higher. And here's the crucial thing. I think it's quite defensive in times of recession, because I think the reality of it is, although it may not be the most fantastic growth stock, is that people will probably carry on drinking beer even in a recession. They might even drink more.
Now, Paul, everyone knows how bad times are. Are people going to start turning to beer, in your opinion?
It's not a growth market. We're going to see there are reducing volumes in beer sales. We're drinking wine. Hopefully you're drinking wine as well. We're not sure what you're drinking, but I don't think you're going to see a lot of growth from it. It's got a property estate that's likely to be dwindling, and ingredient costs for beer are moving up at the moment. So for me, it's not a stock I'm particularly interested in.
Okay, Paul, it's not one for you. So what's your choice this week?
I've looked for a growth company. Now this is a bit shocking.
Sorry, so growth.
Growth. Well, there are always growth companies in all markets. Bear, bull, doesn't matter. There are growth companies. And the one that I've hunted down is a company called Spice. Spice are a company who specialise in something quite boring, really, which is pipe works for water, electricity. They look after reading your water meter. And they look after consulting large companies to reduce down their costs. On the growth side, this stock, it's only got 5% market share at the moment. It's got long-term potential in water meters, which I think are going to be rolled out for environmental reasons. It's going to do well from carbon and helping companies with their carbon management. And this company is really growing. Great results out last week.
So Paul is painting quite a good picture here for Spice. David, what do you see here? Do you see this as a good buy?
I'm guessing as it's a growth company, it's rather expensive. It's over earnings and all that kind of stuff. Funny that, isn't it? Strange that. You end up paying a lot of money for it for growth companies. And the problem is growth has a funny old thing of not happening in the future when you expect it to. So I'm distinctly dubious about any growth company at this point in the cycle, even with those long-term structural things. And they're all really important. But you know what? Funny things happen in the middle of a recession.
Okay, guys, thanks for joining us. Now over to Stephen Barber.
High street banks, I think someone's going to have to look at them again and say it's time to start investing. They're undoubtedly good value with low PEs, high yields. Financials have certainly been oversold. We've seen something like a 50% fall in the financial sector over the past year. This is definitely a sector to keep an eye on. You might have to wait for the rest of the market to recover before you see returns in the capital, but in the meantime, you can enjoy that high yield.
So, defensive plays from the monkeys this week, and who can blame them in such turbulent times? Remember to check out the website FourWM.co.uk to see all the previous episodes. We'll be back next week.